Well, it's that time of the week where we welcome Chris Swift of Swift Trading Incorporated. He is based in Nashville, and now he's in the studio with us. How are you?
I'm doing great, Marlin. How are you this morning?
Monday.
Yes, it is.
Well, on the grain trade, we had mainly a higher start to the day. Let's take a look at where we now stand. All right, let's go check out that corn market. And here we go. On the corn futures, we have September. Well, oops. They threw a banana peel in there, Chris. Now it turned lower, down 1.5 at 3.58. Now 3.57 3/4. So we're down 2 cents now on the corn. December down a penny at 3.66 3/4. If I remember right, Chris, that contract low is still valid yet at 3.63 3/4. Is that correct? So that's still looming down there. So we're about 3 cents away from that right now. We opened up December, I believe, was 1.5 higher, and now we're down a penny. All right, let's move on to the soybeans and see how they're trading so far. On the soybean trade, we have September up 6 at 8.49 1/4, and we have November up 6 at 8.62 1/2. So steady as she goes there, but it is off of its earlier gains from the last Globex market that we had last night. Now, on the wheat market in Chicago, we opened up a little bit firmer, and now we're down a penny. We have September at 4.74 1/4. About that Kansas City market this morning, well, we have September there, trading 1.5 lower. We're at 3.90, so a little slippage, as they say in the grain trade, as we open things up a little firmer, and all of a sudden it's pretty much gone, except for the beans. What happened?
And last night, this morning when I came in, we were all green, and we were up 7-8 cents in the beans and 2 or 3 cents in the corn. And the only thing I can think of, the Pro Farmer Tour that came out on Friday, and they released most of the results of that Friday afternoon. Although they varied from the USDA, they were not greatly varied. I think that was part of it. And then, of course, our presidents between China and the U.S. continue to bicker with one another. And I think for right now, that bickering is causing a lot of uneasiness in the market, and therefore can't really get a traction for a trend.
So we talked about that contract low in the December corn being not that far away.
Right.
Does the market have to take that out, do you think, before it can move higher? Or
I don't think so. When you look at the weekly continuation charts, you're just about in the middle of the range. We noted that back in 16 we were at 301 a bushel. We've been as high as 430 a couple of years from 2014 all the way up to here. So now we broke out above that. We had some kind of issues this spring that allowed the price to go a little bit higher. We settled back down, and we're just about in the middle of that range from the weekly charts. So,
have the farmer sales dried up?
I haven't seen any yet. No, I think they're still pretty heavy marketing in there. So, yeah, I think they want to get this crop marketed. And of course, we really just don't know. It's already back in a bear market trend again. And as bullish as I am, and as much as I believe there are aspects to see corn move higher, we haven't seen anything in the real fundamental world yet to push them higher.
Are you friendly on wheat?
I'm a little friendly towards the wheat market, too. Although this fall right now looks like it's going to be a little bit wet. So that would probably, if you get a couple of days dry to plant the wheat in there, then that should be beneficial to it.
Okay. Well, stay put. All right. We'll come back in a moment. We'll take a look at our livestock trade. Big jumpy markets there, too, Friday and this morning, and we'll cover it when we come back. Thanks for joining us. I'm Marlin Bohling with you, and we're talking about the markets with Chris Swift, who is in the studio with us right now. All right, let's go ahead and take a look at our livestock trade, see what they're doing right now. We started out higher. Remember, we started out higher in the grains, and that didn't last very long. Let's take a look at live cattle. Well, how about that? We are still higher. We have October up $1.13. We're now at $100.53. And December now 98 higher at 105.28. I'm pretty sure that's right where it was when I left it last time. All right, let's check out our feeder cattle trade. And in the early going today, we are up $1.57 on September. We're now trading at 134.82 per hundred. And we have October up $1.07 at 133.60. So we have a few months with triple-digit gains in the feeders. Remember, everything closed lower on Friday. And then you have the lean hogs. Remember, they were limit down on October Friday. This morning, up 255 on October at 61.85. December up 227. And we have it trading at 61.05 right now. Signs of strength in the livestock trade. Are you a buyer? Are you a believer?
There's a lot of volatility in this market, and seeing them up, right now and down again before the day's over with would not surprise me any. Really? Friday's market action was very volatile. pretty much due to a lot of the discussions between the president and China's trade war issue. But the cattle on feed report probably told us more than what, more things we needed to know, and that was we still have a lot of inventory outside of the feed yards to come into the feed yards this fall. 97% placed. If it were a little bit drier this summer, we would have seen that probably in the 101, 102. So I think we're placing fewer cattle. We still got good grazing conditions. The marketing number was excellent, 106, 107, and the on-feed number 100. So that should promote a little bit of good market news for the December fat cattle contract. I think it still weighs heavy on the feeder market, knowing there's a lot of inventory yet to be marketed.
Well, I know you're really well connected on the cattle industry. What's going on with the fact that in the southern plains pastures are drying up?
Well, nothing more than just moving cattle naturally north. So that's what we're doing, is we're moving them into the feed yards, one of the two. But we still didn't do it. Even in the south, we didn't see elevated numbers there. So although it is drying up, it's not drying up at a very rapid pace, or we would have seen a larger placement number in that number.
Well, that's what I wondered about, and I kind of had a hunch maybe that would pick up a little more. I didn't really see evidence.
Some of them could have gone, if you look at the weight categories, some of them could have gone into a preconditioning lot. They're coming right straight off of a hot pasture like that. They made a little time to cool off a little bit before they go into a feed ration.
Okay. On the cash hog side, is too much inventory around, or what?
There's still a lot of it out there. The index dropped all week last week. It was down again this morning when I looked at it. The basis is still horrible for it. It's a big positive basis. The futures are all trading lower for the remainder of this year, and still no seemingly outlet to be able to get rid of this U.S. pork.
Okay, well, thanks for coming in, and
Absolutely.
Always enjoy talking with you about stuff on a Monday.
I appreciate being here.
Thank you very much. Chris Swift of Swift Trading Incorporated right here in Nashville.
All right, as always, gentlemen, thank you very much.